share for me?
Yes, you can share it.
So, do I have access to
Yes.
share?
Yes,
Okay.
sir.
Can you see my screen?
Yes, sir.
Yes, please.
Okay. Okay. Good afternoon, everyone. So, I'm here to present my own view about NERA 2025 responsibilities and opportunities for chartered accountants. Can you see my screen?
Yes, sir.
Hello.
We are seeing your space, sir.
So my content, so I'll be speaking about, there's going to be an introduction, the major provisions and implications of the Act. We'll first
We
of
are
all
seeing
talk
your
about,
screen, but not your slides, sir.
okay, you are seeing my screen, but not my slide.
Yes.
Okay, let me stop sharing and reshare. Hello.
Yes, sir. We cannot see your screen yet.
Yes, I'm even struggling to.
Let me see if I can share from here.
I'm even struggling to see.
Let me try and see if I can share from here, sir.
Okay.
Can you see my screen, sir?
No, I can't.
We can see it.
We can see your screen. Nigeria Insurance.
Are you
We can see the vice chairman's screen. Yeah, we can hear you. We can see your screen now.
And
Okay.
I can no longer see my screen. I can no longer even see the. Okay, let's go on. Let's go on. I will. So the NIRA, it's NIRA is Nigeria Insurance Industry Reform Act 2025. We have been, for the past for quite a while, the Nigeria insurance industry last had a major legislation passed. Hello, can I go on?
Yeah, you can go on, sir.
So the Nigeria insurance industry last had a major legislation passed in 2003, which was the Insurance Act 2003. And subsequently, a lot of water has passed under the bridge. So I know there have been like 2 attempts to recapitalize the industry, which has been met with fierce opposition from the industry, basically because the act specifically stated what the share capital should be, and the antagonists of capital increase were of the opinion that for you to increase the capital of the industry, then you had to amend the act. So eventually, sometime last year, Senator Tokunbo Abiru sponsored a bill. That bill is what has now become NIRA Act. And it was assented to by the president on the 31st of July 2025. One of the things, it is expected to modernize the insurance sector by replacing outdated regulation. And for those that are part of the industry, you will see that a lot of circulars, a lot of guidelines has come up within this period that the act was that no major legislation was passed in that respect. And one of the things NIRA also did was to put all the One of the things NIRA also did was to put all the laws governing insurance industry in Nigeria into one single act. So the act repealed the Insurance Act Cap 117 Law of the Federation of Nigeria 2004, Marine Insurance Cap M2 Laws of the Federations of the Law of the Federation of Nigeria 2004, Motor Vehicle Third Party Insurance Act Cap M22, Law of the Federation of Nigeria 2004, National Insurance Corporation Nigeria Act Cap M54, Law of the Federation of Nigeria 2004, Nigeria Reinsurance Corporation Act Cap N131, Law of the Federations of Nigeria of 2004. One of the aim of the act is to boost the industry financial stability and competitiveness. I'll give you an example. In about 2 weeks ago, the Commissioner for Insurance was in the news at a retreat in Maiduguri, where he was boasting about a claim of $84 million that was paid by the industry to an insured who paid a premium of about $175,000. For that particular claim, it is an accepted norm in the industry now, where we basically believe that some of the companies are struggling for liquidity. And as I was joking in my office recently, I was looking at how the companies were paying that claim, and I saw one or two of the companies promising to pay their claims in installments. And if I were, I said jokingly that if I were the insured, I will never place my business with that kind of company again, because if you have to pay my claim and you are now paying the claims in installment, it shows that you are not capable. And of course, the claim was so mighty, and about $84 million. For example, my company had to pay our portion of that claim was about $4.2 million. $4.2 million. And
wọ́n fẹ́ ra
and
cream
we
bóyá tá a bá ti ń bọ̀ láti.
hello.
Please go
And
ahead, sir.
so
Please go ahead, sir.
and so we pride ourselves as being, I think, among the first three companies to pay that claim. So if we have seen, for those that have been privileged to see the guidelines released for the recapitalization, you will see that the major aim
Mr. Ogo, please unmute yourself, sir.
hello.
Yes, you are on, sir. You were
Yes, we can hear
muted
you.
for
Go
a
ahead,
while.
Mr. Ugo.
So the insurance awareness in Nigeria, the insurance awareness index is among the lowest in sub-Saharan Africa. It is about, and will contribute less than 0.6% to the GDP. And we all know that in the advanced economics of the world, the insurance industry is one of the most sophisticated, and in many instances, in some countries as close to us as South Africa, it is insurance companies that owns banks. And so one of the aim of this NIRA is to provide an environment where we'll be very competitive and also contribute more to the economy, especially the $1 trillion economic target by the present administration. And on what are the major provisions and implications? There is a regulatory overall. This act has created a single framework for the National Insurance Commission to oversee, unlike in the past where they practically had about six acts that they were dealing with. Everything has been put into one singular act, and because of the outdated legislation, a lot of circulars, guidelines has come up in the last 10-15 years. So a lot of this has been taken into consideration into NIRA, and it is now for NICOM to run with it and make the industry a better one. There is also increased capital requirements. Before now, for a non-life company, the capital needed to operate is 3 billion. For a life company, the capital needed is 2 billion, and that was last done about in 2007. At that point in time, I think the exchange rate should probably be maybe a maximum of 160 to $1. So you could say that we are operating on a very, very low capital in the industry. So the capital has now been increased to, for the non-life company, it is now the higher of your risk-based capital of 15 billion. For the non-life company, the higher of your risk-based capital or 10 billion. For the reinsurance company, it is the higher of your risk-based capital or 35 billion. You ask me what is the meaning of a risk-based capital. If you go to my next slide is talking about risk-based supervision. All over the world, all over the world, insurance supervision has moved to a risk-based approach. And they are cognizant of the fact that every insurer is look at their risk appetite, and based on their risk appetite they can decide what they want to do and what they don't want. Companies in Nigeria, let's assume one insurance doing motor insurance and another company is interested in insurances such as oil and gas, aviation, marine or marine cargo. You will all agree with me that for someone doing special risk, aviation, marine or marine cargo, his risk profile is more dangerous than that of somebody underwriting only motor. And so the model is now telling us that you should own capital based on your risk profile. So it is more so going forward, a company that is writing aviation, oil and gas, marine or general accident will need to have more capital than a company that maybe is interested in doing is to do motor business. Of course, in some of the advanced economics of the world, like the United States of America, like China, you will see that a lot of insurance companies specialized in this based on their risk profile. You see some that what they basically only do is only motor, while some are known for their specialization in marine business. Some are very good at aviation. So going forward, the industry, the NIRA is telling us that you must own capital based on what you are underwriting, and you will be supervised based on your risk profile. Gone are the days of the one gone are the days where everything is done generally for everyone. Then NIRA is also saying we must automate, digitalize our operations, that now to improve efficiency and access, every of your operations must be automated, it must be digitalized. We want to get to a situation where all you need to do, for those that have encounter with insurance company, maybe now want to get to a stage where if you have a claim, all you need to do is probably open an app the way we open our banking app, lodge your claim, upload the necessary documents, and you'll be attended to. Some of us that are here, including myself, pride ourselves in not being to the banking hall for years, and one of the things NIRA is saying is that they want the insurance industry to get to that level. Another thing is enhanced consumer protection. Now, NIRA has proposed a guaranteed fund to protect policy holders in case an insurer fails. So now there is a policy holders fund that is going to set up. So in case there's a problem with that insurance company going forward, that does not mean you are not going to get your claim paid. For those that does investment savings with insurance company, with this fund, there is a guarantee that you will always get your money back. Unlike in the past, I've heard stories of some that were saving for their retirement for 20 years, and maybe in the 18th, 19th year, the company they've been saving with in the insurance industry goes down and all their savings are gone. And NIRA is saying with the guarantee fund, you will be able to make your claim. And also, penalties are now going to be imposed for delayed claim payments. In the past, what has happened is if you lodge a claim from once you have when you lodge a claim and there is everything has been sorted out, and a discharge voucher will be issued to you telling you the amount of liability that is due, the amount of liability the company accepts. And once you execute it, the company is liable to pay. What was happening in the past is from the time you execute the discharge voucher, the law allows you to pay within 90 days. But now NIRA has told us that from the day you report the claim to the settlement, it has to be 60 days, including please, you need to take into context what I'm saying. In the past, it is when you execute the voucher that the 90 days will start counting. But NIRA has now said that from the day you report till when you get your money, it is going to be 60 days. So now it is now incumbent on the insured to get the claim properly documented so that payments will be made. I also foresee a situation where the insurance will be coming up with very stringent timelines for submission of documents because nobody wants to run foul of NIRA. Another thing that NIRA has done for us is market specialization. In the past, we had composite insurance. Composite insurance are insurance company that own both the non-life and the life licenses. Examples of them in Nigeria are like Leadway, AXA Mansard, ICO. And NIRA is now saying that no one will be allowed to have a composite license going forward. So if there's anyone applying for a license to operate an insurance company in Nigeria, you either get a non-life insurance license or you get a life insurance license. And for the composite companies like the ones I just mentioned, they are expected to specialize within 5 years. The law was signed into law on the 31st of July 2025. So we expect that by 31st of July 2030, all the composite insurance companies in Nigeria will have broken down into both a life company and a non-life company. Then another thing is there's a mandatory insurance expansion. So now going forward, there's now coverage for risks such as public buildings, construction projects, and government assets are now mandatory. So going forward, it is compulsory for public building to be insured, construction projects to be insured, and government assets are now mandatory to be insured. Hello, can I go on?
Yes, please, sir.
Okay, so it is now compulsory for those insurance to be undertaken. Then there is also what we call a regional realignment. So there's something we call ECOWAS brown card scheme. What ECOWAS brown card scheme means is, like, in the if you have a third party, if you have a third party insurance, a third party insurance is the insurance you have that in case an unfortunate incident happens to you while driving your car and a third party is affected, that insurance covers the third party to the tune of 5 million naira. So if I have a third party insurance for my car and I happen to hit somebody or to bite somebody's car to the tune of 5 million naira, the insurance company will be responsible. So the ECOWAS brown card now is a third party insurance that covers you all through the ECOWAS nations. So that means you can drive from here to all the ECOWAS country with your car and you have a third party insurance coverage. In the past, what has happened is if you need to travel outside Nigeria with your car, you need to get an ECOWAS bank card separate from the third party insurance, but that has now been incorporated into your third party insurance. Then, like I said, it's to increase our insurance penetration, to boost the economy, and the injection of more capital into the industry is to make the industry to be more resilient and better equipped to absorb some shocks. You will have, like I said, the industry recently had a claim of $84 million paid. I've seen some that are more. Just maybe about 2-3 months ago, another major claim came on board, a 41 billion naira claim, which the industry is battling with. If even at an as a company, I know for my company, for example, this year we've had to, apart from the $4.2 million, we have a particular claim that is we've estimated about 5 billion for. There's another one we have an estimate of about 3.2 billion for. So it is, so if you do not have enough capital to run the business and your underwriting and governance practices are not well solidified to withstand these shocks, then you just see yourself going down the drain. And that is what NIRA has done for us. Then we'll now come to the traditional responsibility of an accountant before NIRA 2025. Basically, as an accountant, what we do is we manage the finance and accounting team. We help the company manage its income and expenses. We prepare and approve budgets and prepare the financial reports. We are involved in forecasting and planning for the company. We act as financial advisors for business proposition, investments. We are responsible in preparing financial strategy for the CEO, the board of directors, and helping in contributing to the overall strategy of the company and managing them. Then we also established professional relationship with the other executives of the organization and other stakeholders, and will drive the company towards success with our financial expertise. Looking at NERA 2025, what are the roles that the accountant is expected to do? Looking at it, we'll see that as an accountant, you are now expected to be more strategically focused. That means you have a role that you are supposed to blend your expertise with strategic leadership, innovation, and transformation. Now, for example, the industry is expected to go digital. You are, as an accountant, you play a major role in the acquisition, you play a major role in the formation, in the workflow process, and even making sure that everything is expected to, and making sure everything works right. You are now expected to act more like a macroeconomics and also contain some other issues that, or micro issues within your own sphere. So you got into a situation where there's a lot on compliance, there's a lot on compliance, there is a lot of governance with NERA 2025, and as an accountant, a lot of the things about compliance that NERA 2025 has brought to us involve figures, and there is no way those reports will be signed off, those reports will be sent off without the involvement of an accountant. We have even got into a situation where you see that a lot of those strategic departments, like like compliance, risk management functions, are being managed by accountants. Virtually everyone that are in charge of those departments now are chartered accountants. You will probably not find any other functions in those you probably not find any other functions managing any other discipline managing those functions in an insurance company. So you now need a combination of your quantitative skills and emotional intelligence to understand the needs of the organization and its people. And the thing about NERA is it comes with a lot of fines and penalties, and for every organization that want to be taken serious, you don't want to be found wanting in the area of being penalized. So a lot of attention is paid to the area of compliance and risk management. And you now find out that even in many instances now, before those figures are released, before those figures are sent out to the regulators, you have the accountant being asked to review, being asked to sign off, being asked to agree with those things so that the organization does not get into trouble. That is what NERA 2025 has brought on our shoulders, and more than ever before, the chartered accountant working in the insurance industry has a lot of role to play. Two, so then what are the responsibility of the accountant in NERA 2025? You now have a more strategic involvement. You are not supposed to focus on only finance and financial reporting, but you are now heavily involved in technology, digital initiatives, and even integrating legal considerations into your decision making. You are now responsible for data analysis and fundraising. Now we all have till 31st of July 2026 to recapitalize, and a lot of discussions are going on towards raising capital to for the organizations. And you see that at every fora, at every event towards this, you will see that the accountants are one of the most important members of those teams. You are also to facilitate proactive compliance program. There's a lot of compliance with NERA 2025, and there are still lots of there are a lot of guidelines that have been sent by the regulators that we are still expecting them to come out with the final circular. And so you have to be on top of the game. You now have a situation where for every compliance report that is being sent out, you are expected to you are expected as an accountant to sign off. You are expected to review. They need your buy-in into, because you want those figures, and it is only when you say those figures are right that it is taken to be. Then you are also claim settlement. I earlier explained how claim settlement has now gone from 90 days after executed DV to 60 days from the day of the report of the claim. And so as the accountant, you are supposed to manage the finances of the organizations, and you are supposed to manage the finances of the organization and ensure that claims are settled as at when due. In my organization, we pride ourselves as that we are one of the fastest to pay claims as at when due. One era going forward, one era I said is to like place everybody on the same level about claim settlement. And so we may now have to start looking for some USP to other USP to gain customers. You are now expected to have strong leadership skills to align with other executive and support the company's framework of compliance. You are expected to play a role in the ESG reporting standard that is expected to come on board in 2027. And as the accountant, you will not be able to do all this without working closely with every major department of the organization. In rounding up, what are the opportunities available to the accountant from NERA? Let me drive it home with this example. In my organization pre-2007, the finance and account department of my organization had, I think, maximum of 10 staff. As we grew bigger with our organization, because that particular department has now been split into the non-life and the life operations. And I think we currently have a staff strength of close to 50 in the finance and account department. And I can say that if we are now expected to have our capital increased by 5 times, the operations will be more. I know from 2007 to this period, I think the operations of my organization has probably increased maybe 2,000, 3,000 times, and with more capital to play about. In spite of the automation, there is going to be more need for accountants that are very vast especially in the insurance industry. And even for those that are not vast, upcoming accountants, we have a lot of job opportunities that will be coming up in the industry with the recapitalization that is being done. Then we also have a lot of regulatory compliance. Now, like I said, a lot is expected from the risk management team, a lot is expected from compliance, even from the accounts department. A lot of reports are expected to be submitted almost on a weekly and monthly basis. And for this, there's a lot of there'll be need for us to, even though a lot of those operations have been automated, there'll be a need to get more hands involved, because even though you have those figures automated, all those processes operated, you still need somebody to review those figures, you still need somebody to input those figures into the system. And so for compliance, you will need, I'm sure there'll be a lot of employment opportunities for accountants going forward post July 2026. And as I will then, for the actuarial function, let me put the actuarial function this way. Before now, since we got into IFRS in 2013, there have been a lot of demand on actuarial function in Nigeria. Nigeria has a depth of actuary. In fact, I was at a function of the Financial Reporting Council early this year, and they said that the fellows of the Nigeria Actuarial Society are currently less than 30. And for the insurance industry, for the insurance industry, we are expected for our statutory audit, we are supposed to engage a statutory actuary, and that particular part of the function has been dominated by the Kenyans and the South Africans. It has been dominated by the Kenyans and the South Africa. If I even I can to drive how desperate the industry is in need of actuary. About 3 years ago, I met an actuary that works for one of the insurance company in Nigeria, and he told me he was recruited from Gibraltar. They brought him in. The insurance company had to lodge him in Eko hotel for 3 months. Subsequently, they got an official residence for him in Victoria Island. I know all what my company has gone through in trying to get an actuary to work for us. Last year we needed an actuary, and you could see that once you all offer, the guys are giving an offer, it comes back and demand for something else, and we keep acceding to his request because they are so scarce in the industry. Even the top four, because whatever our actuary does, in signing up on the account, the top four need to get their own actuary to review it. And you even see that the top four in Nigeria are using their colleagues in Kenya, they are using their colleagues in South Africa to do those things. In fact, this week, my auditor had to fly in an actuary from Kenya to do a meeting with me. Why am I saying this? There's a lot of opportunities for the actuarial function in the industry. And if you are still very young and you have flair for figures, you may considering taking the professional exam in actuarial function, and I'm sure you will not have any regrets doing that. You have some of the fellows. I know of a fellow of the Institute of Actuary that was born in 1984. Because of his demand everywhere, he is currently an executive director He became an executive director in an insurance company at 38 because what he was simply doing was, because they were in high demand, if he wants to go here, the amount of money we ask for will place him in the top echelon of the organization. And within just having a 15-year career, the guy is now an executive director. Another opportunity is consulting. We are doing a lot of things. We are doing recapitalization. Everyone is trying to come up with strategy to recapitalize. There are a lot of things you need to do with NIRA. So for those that are in consulting, this is an opportunity to make a lot of kill from what is happening in the insurance industry. And lastly, I'll talk about, if you are very good at marketing, if you are very good at networking, then the insurance industry is an opportunity for you to make money. And I would like to give like 2 or 3 examples to drive home this point. You can be an insurance agent. The insurance industry is the industry where for every business that is placed, somebody earns a commission, or somebody may likely earn a commission. So if, and NIRA in section 30, between from section 37 talks about being an insurance agent. All you need to, once you are an insurance agent, you can have an agent license from the insurance, you can have an agent license from NICOM. And if you do that, you can earn commission on any business placed with insurance company. What do you need to do? There's a certificate of proficiency that is issued by the Chartered Institute of Insurance of Nigeria. And once you have that license, you have a right to earn commission for any business that is placed with an insurance company. And let me drive it home with this point. There is, in my company, we have 2 types of marketers. We have some marketers that what they basically, they earn salary, and there are some that they earn commission. They just bring their business in, we pay them commission, they are not on salary. Of course, I'm going to give you an example that is very exceptional. There is a lady that just earned commission from just using a vast network to bring business into my company. And on Friday, I asked one of my associates to help me review from the bank account how much that lady has earned this year. And the figure they came with is 305 million. The lady has earned 305 million this year. In the last 3 years, from placing businesses with my company, the lady will have earned close to 1 billion naira. Just basically because she is using her marketing skills to place business with the insurance industry. And to round it up, I used to have a colleague that is a chartered accountant. When he came into the company, he was always bringing a lot of business. In my company, we encourage people to bring business, and we say that it is one of the sources of generating additional income. And so because this chartered accountant was always bringing a lot of businesses into the company asked him whether he would like to be redeployed to marketing, and he agreed. He did so well in marketing that I will use 2 things to drive home how well he has done. In 2014, the wife ran into crisis and they needed to raise $250,000 within 48 hours, or the wife would die. A book has been written about that event. They got at least 50% of that $250,000 from their personal savings, from the commission this guy has been saving. And they flew that lady abroad and the surgery was done. And today she's up and doing. Even the lady I'm talking is a very prominent member of our institute. although I will not talk about her. Subsequently, when the guy saw that he was doing too well, he decided to resign his appointment, set up a brokerage firm, and he's doing excellently well. If for somebody to have a child in Imperial College in London studying medicine, and the guy is financing it from his business, you should know how well the person is doing. So these are some of the opportunities that are available to us in the industry based on your passion, and that is all I have. Thank you very much.
Wow, thank you very much, sir. We quite appreciate you, and that's a very insightful, motivating, and really eye-opening. Thank you very much, sir. Well appreciated, sir.
You are
Can we
welcome.
do some electronic appreciation for him while we wait for any of our members that have questions? If you have any question, kindly raise your hand electronically. Okay, if you have question, please raise your hand electronically. I can say 2. Once we start, we will not accept any other question. Any other question going? Okay. Okay, so we take the 3. Let's start with Mr. Sulaiman Ibiduni. Then we have Adetola Adesoya, then Ojejiro. Yeah, Mr. Sulaiman.
Okay,
Let's have
good
your question.
evening, everyone. I want to appreciate the lecturer for the well articulated delivery. So my question is just to clarify, while you were explaining the issue of the insurance company not being able to um, have different types of operations or policies that they are running. So does this imply that the minimum capital will have to change, will have to increase, or what's the implication on the capital requirement being 15 billion and 10 billion? So I really want a clarification on that, sir.
Okay, so I think it's better for us to take all the questions so that he can now attend to them all at once. So Adetola Adesoye.
Yeah. So this is my question. My question is relating to the opportunities that you had said are available for young accountants, and then relating to what he said about actuarial sciences, and those who have who are good with figures can also go into actuarial sciences. So my question is, for people who now go into field, what are the chances that they get to, right? So for example, somebody that already has like about 8 years experience, but is still very young and can still go for the professional exam. How would he advise that they start to get into the business again? How do they get into, insurance? How do they, because it's like they're starting from scratch. So what would his advice be to people like that? Thank you.
Okay, Ojejiro Oluwaseun, let's have your question, please.
Okay, thank you. My question is, firstly, I hope we'll be able to get a copy of the presentation from Mr. Ogunwo, Mr. Ogunwabayomi, so we can as well be able to access the documentation. Secondly, is on the actuarial rendition to NICOM. I want to know if there is still a quarterly rendition or yearly rendition because given the new act by NIRA, I want to find out if it's still possible that NICOM will still be subjecting will still be subject actuaries to quarterly renditions like they do. Thank you.
Okay.
Okay.
Thank you. Can you take the question, sir?
Okay, thank you thank you very much. Let me start from the last question. Okay, I can assure you you will get a copy of the presentation. Then with respect to the quarterly rendition of returns to NICOM, that is still expected to go on. In fact, one of the major highlights of the recapitalization guideline is that every insurer is expected to submit the valuation of their insurance and investment contract liabilities to NICOM on or before 15 working days after the quarter end. And they said going forward until NICOM decide otherwise, that is what is going to be. So the rendering of returns to NICOM with respect to actuarial valuation and a lot of other returns in fact it has even become more stringent. For example, concerning our financial reports, in the past, when I newly came to the industry, you have 1 month after the end of the quarter to render your returns to the industry. 2 years ago, it was 2 years ago, a circular came and changed it to 15 working days after the end of the quarter. And NIRA has changed it to 10 days after the end of the quarter with the coming in of NIRA. So that is that. On the actuarial science, I must tell you that if there's any aspect of the industry where if there's any aspect of the industry where there's so much depth of human resources right now, it is the actuarial function. It is the actuarial function. And for example, I was at an ESCO meeting of my organization 2 weeks ago, and part of the things we were discussing is maybe how we will catch them young. We will catch the we will catch we probably we discussed about maybe going to the universities, trying to encourage a lot of, because we've seen instances where people study actuarial science in the in the university without basically know what the opportunities available to it. And we thought about going into the universities that offer it and try to entice the young graduates to work for us. So right now, you are interested in if you are interested in working in the actuarial function, if you have an opportunity to come in, and I can tell you that the sky is the limit for you. Let me put it into context for those that are in the actuarial function. There are very few of them that I relate with in the industry, but I can tell you that a lot of those that I relate with are probably at the level of a DGM, an AGM, an executive director, or even an MD. And you see, for a lot of them, they didn't get to that position by promotion. They got to that promotion because of the need for that function. So you are a mutual, you are an AGM, you are earning, for example, maybe hypothetically you are earning 10 million, and Leadway wants to poach you. Leadway wants to poach you, and you are telling Leadway, I want 20 million. And Leadway looks at their salary structure, and where you can probably fit in is a GM. So they put you there. Once you get there, Old Mutual wants you and you want to collect 30 million. you want to collect 30 million, and where their 30 million will put you is to an executive director. So you now see that a lot of those guys that are into actuarial function are probably not staying in just they don't get so many promotion. They rise to the top through moving from one organization to another organization. So for there is, if you are interested in that function, but the thing about it is you must be ready to. I learned the exams are so expensive. The professional exams are so expensive. They pay in FX, but if you are lucky to find yourself in an insurance company, all those professional exams will be refunded to you by the organization. For me, for like in my organization, once you write any exam, you just present the receipt and you are refunded. That is our policy. But if you are very interested in the actuarial function, I will also say that maybe you may need to study. The leaders of that area in Africa are the Kenyans, are the South Africans. You see a 27-year-old guy from Kenya that is already a fellow, of the Actuarial Society of London. And there are a lot of them in those space. In fact, almost everybody that I work for in that I relate with concerning my actuarial function in Mutua, they are from Kenyans. They are very young guys, and almost all of them are fellows. And I don't think there's any one of them that is more than 32, 33. So there's a lot of avenue if you are willing to burn the midnight candle for the exams. And I tell you, if you get to the industry, there are a lot of opportunities for you. It's like they are practically begging people to come and work in that function. In my company, we've had to go to some other department, look at some very bright guys there and say, see, go into the actuarial function and we'll sponsor it. But maybe because some of them are scared, they are not passionate enough, they
It's separate.
they they reject the offer. Then for
You
Mr.
were going
Sulaiman, you talked about, even though I don't understand your question, but I think there are two aspects to the that I want to answer this question. Let's look. The law says that your capital will be the higher of your risk-based capital, or 15 billion for a non-life company, higher of risk-based capital or 10 billion for a life company, higher of risk-based capital or 35 billion for a reinsurance company. So what has happened is there is the regulator is coming up with a template. It's coming up with a calculation. We got the draft sometime last year, and we were asked to make our comments. Those comments were made, and we are still expecting their feedback. But we know that very soon the circular on risk-based capital will be out. And so what the calculation is saying is, what that circular is saying, that this is the way to calculate your risk-based capital. So if at the end of the day you do your calculation for your business and your risk-based capital is saying 25 billion, even though you're a non-life insurance company, you will have to look for 25 billion. But if you calculate your risk-based capital and your risk-based capital is saying your risk-based capital is 12 billion, your minimum capital requirement is 15 billion, so you maintain that 15 billion. I think what the rationale behind that, at the beginning I said that there have been plans in the past to increase the capital of the insurance company, and there have been fierce opposition. So what this means is that going forward with NIRA, you will constantly have to inject capital into your business without any legislation from the National Assembly. Then I also talked about the risk-based supervision. The one of the risk-based supervision is saying that the kind of risk that somebody that does only motor insurance business will have will be minimal comparing to somebody that he does oil and gas, aviation, he does marine ore, he does marine cargo, and those are for example, if you do motor business, maybe the most expensive car you probably will insure for a motor, maybe maximum, let's even say for motor, the maximum you probably will do. I don't think I've seen a car that is worth more than 5 billion. I don't say I've seen a car that is worth more than 5 billion. But in some other, if you see a sum insured in oil and gas that is 5 billion, that is probably like an Okada. In those instances, you start seeing sum insured of 300 billion, 400 billion, 500 billion. What that is saying is that when the sum insured is saying that if the unfortunate incident happen and there's a total loss, you are probably likely to be liable to that sum insured less on deductions. So you can see that is why we are talking about your risk profile. I hope I've been able to answer your question, Mr. Sulaiman.
Yes, sir, but quite, you mean a part of it. The part where you said that the more you have different type of policies that you are dealing with, like you mentioned now, motor, marine, and the likes, the more will be your capital base. That's what I was trying to ask about, sir.
Okay, that is,
So,
you see, like I said, there is a draft, there was a draft circular that was sent to us last year, and we were asked to make our comments, and we have sent it back. So we are expecting the circular, the guideline to come out in form of a circular anytime from now. What it's that all over the world, insurance supervision has moved to the risk-based model. So there is a calculation, like a formula for calculating your risk profile. So you input all your figures from your different classes of business and everything into those formula. It's a lot of work. In fact, in trying to do that, from the draft circular, in trying to do that for my company, I think we had to use like 7 or 8 Excel sheets to do those calculations. So once you input all those figures, you get all the figures are gotten from your operations, they are gotten from your financial report. So once you input those figures, it will now tell you what your risk-based capital is. So the law is now saying that if your risk-based capital is higher than the minimum capital required, you will have to go for that risk-based capital as your capital. But where it is lower, then the minimum capital will be what you'll be expected to hold. I hope I've made it clear.
yes, this is clear now. Yes, this is clear now. Thank you very much, sir.
Yeah.
Thank you very much, sir. And we want to appreciate you for the time you spent with us, and very quite engaging and eye-opening to us. We appreciate your time with us today, sir.
Thank you so much.
I want to call on my chairman is on the call now. She's going to do 2 things. She will appreciate you and speak to the members. My chairman, Dr. Titi Fowoko.
Thank you very much, my vice chairman. Can you hear me now? Can you hear me?
Yes, ma'am. We can.
Okay. Yeah. Good evening, distinguished guest speaker. Thank you very much. I've been on the training, having come back from a trip. Thank you for that detailed, rich presentation. It made me to feel like I want to go back to read the act and come back to class, the insurance class. Thank you very much. I want to say good evening to my past chairman on the call. I'm not sure if we have a pioneer chair, but I can greet him in absentia. My immediate past chairman, I say good evening to everyone. To all our distinguished members of the model district, I appreciate you all for this time. Apologies, I'm joining late. I was actually on a journey, I was out of the country, so I just came back and could not join while on the trip. So thank you very much for all being on this call. I want to also appreciate every member for what we've been doing in the district. Thank you for the way you've held forth. As we have known, we are all known for being on top of our game. So this training is also an area where I would want to admonish us. We have quite a lot of things rolling out in this 2025. We had the Nigerian Tax Act, the 4 tax laws that came out was in 2025. We are now having the Nigerian Insurance Industry Reform Act, which means anything we know about insurance business, we have to go back to unlearn what we have before and relearn the new things. So this is quite timely for all of us. So I want to admonish us to take our time to go through the slides, go through the law itself so that we can tie the explanation in the slides to the law. I also want to appreciate my vice chairman for holding forth, for standing in. By the grace of God, I'm actually rounding up my course. And by this time next month, I should be having the final sign off, which by God's grace, we're believing that all the time we work out and the president will not move the dates. So thank you so very much for standing forth. I want to also remind us that as a district, we have this zonal, I know we have discussed it, the zonal conference. Ilupeju Bagada is hosting it. I don't think it will be too much to re-emphasize that we all have to be on top of this. We must all see it as our project and we must deliver. And I know everybody's waiting to see how it goes. So I believe that everyone in this district, we are all going to stand up to that task, and also our sister districts as well, the Surulere district and the Ogba-Ojodu. We are all working together as a team to deliver on this. This is critical for us. It's very close now. So I look forward to all your cooperation. Thank you very much. Thank you, Vice Chairman, Deputy Vice Chairman, all ESCO. I appreciate your efforts in making sure that this district is making giant strides. Thank you so very much. I hand over back to, I want to pass the party back to the Vice Chairman to continue the meeting. Thank you.
Thank you, my chairman. You are welcome back, and we are looking forward to having you join us back fully, and to bring back that much coveted MN9. Lord is your strength, man. So our time is fast spent. So we'll go. Let's get for those that are joining us for the first time. Kindly raise your hand electronically. If this is your first time, that means you completed your registration as a member of the district from between the last meeting in September and today or yesterday. If you completed your registration process in the last 1 month, kindly raise your hand so that you can introduce yourself. Let's get to know you. This probably your first meeting with us. So officially as a member,